Hello, this is Japanese Economic Review Channel. Today, we will explore Japan's macroeconomic trade dynamics for March 2026. We will analyze the latest statistics to uncover structural shifts in global supply chains and Japan's competitive positioning. In March 2026, Japan's total exports grew by 11.5% to 10.98 trillion Japanese yen, while imports rose 10.9% to 10.33 trillion Japanese yen. Consequently, the net trade surplus expanded by a robust 21.4% to 642.9 billion Japanese yen. Export velocity clearly outpaced import costs. Looking at the macro balance, Japan moved over 21.3 trillion Japanese yen in total gross trade volume. The 642.9 billion Japanese yen surplus confirms a healthy macroeconomic state. Despite rising import costs, strong export performance solidified a net positive position. Our trade structure shows a stark asymmetry. Japan imports foundational energy like mineral fuels and raw materials to sustain its economy. In return, it exports high-value precision engineering, specifically transport and electrical machinery. This defines our core economic model. Our export engine is powered by automobiles and tech. Transport equipment alone accounts for 21.1% of exports, reaching 2.31 trillion Japanese yen. Passenger cars saw a 14.7% value increase despite a 2.4% volume drop, showcasing extreme pricing power and a shift to premium models. On the import side, we see a tech influx. Electrical machinery imports surged 25.9% to 1.91 trillion Japanese yen, heavily driven by telecommunications devices. Conversely, mineral fuel costs dropped 3.3%, easing the burden on our energy-dependent grid. Geographically, the U.S. is our absolute anchor, providing a massive 725.7 billion Japanese yen surplus. This effectively neutralizes the structural deficits incurred with regions like Europe, which posted a 140.9 billion Japanese yen deficit, and parts of Asia. Zooming in on the U.S., the surplus is driven overwhelmingly by the American appetite for Japanese cars. Automobile exports to the U.S. hit 493.6 billion Japanese yen, growing 25.4% in value. The U.S. market operates as our ultimate consumer release valve and primary profit center. In Asia, we observe a highly integrated tech ecosystem. Japan supplies high-margin components like ICs, which grew 52.8% to China, and manufacturing equipment. In return, we import assembled consumer hardware, like telecommunication devices, forming a closed-loop supply chain. Without domestic reserves, Japan runs unavoidable deficits with resource-rich regions. The Middle East accounts for a 653.6 billion Japanese yen deficit, dominated by mineral fuel imports. Similarly, Oceania contributes a 418.4 billion Japanese yen deficit, primarily from raw materials. These data points illustrate Japan's economic metabolism. We act as the world's premier technological refinery. We import fundamental energy, ores, and food, and transform them into advanced physical and digital infrastructure, such as semiconductor components and heavy machinery. Finally, a reality check. While headline export values surged 11.5%, physical volume only grew 3.6%. This indicates that the vast majority of our trade growth is currently driven by inflation, currency impacts, and powerful unit pricing authority in global markets. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.